Right, so I think we're all ready to start today's technical analysis webinar. Firstly, I'd like to thank all of our attendees for attending today's event. My name is James Haygate Brown, and I'm joined with our guest presenter today, Remy Garçon, the head of global research for Trading Central. Now, before I continue, I would first need to read out our Trading Central disclaimer. So the information contained in this publication is not intended as an offer or solicitation for the purpose or sale of any financial instrument. Any opinion offered herein reflects Trading Central's current judgment and may change without notice. Users acknowledge and agree to the fact that, by its very nature, any investment in shares, stock options, and similar and assimilated products is characterized by a certain degree of uncertainty, and that, consequently, any investment of this nature involves risks for which the user is solely responsible and liable. Services in the US are offered through Trading Central Americas Incorporated. And with that, I will move on to our presentation. But before I introduce Remy, I'd like to provide a quick introduction to our firm, Trading Central. We've been established as an independent research provider specializing in technical analysis for about 15 years now. We were founded in Paris and now operate out of the key financial hubs in London, Hong Kong, and New York. Our international analyst desks cover the global futures, equities, and money markets 24 hours a day, producing research reports on some 9,000 global securities. We work with over 150 financial institutions in 35 countries, including such prestigious names as BlackRock, Morgan Stanley, Merrill Lynch, and State Street. We are also a registered investment advisor with the SEC and are a certified member of the Investor Side Research Association. Now, we have a very interesting discussion for you today. People understand that energy is probably a vital part of their daily lives, but they might not realize just how integral agriculture is to their lives as well. So firstly, with a growing global demand, it's logical that more and more is required to sustain us as a population every day. With that, there's also the growing middle classes in emerging countries, such as China and India, that mean that more people are becoming wealthy enough to start adding protein to their diets, aka various forms of meat. So surprisingly, the number one use of corn globally is actually to feed livestock for consumption. The second largest use for corn globally is in the production of ethanol, a biofuel for our cars. What's interesting is when an SUV fills up here in the States, about a bushel, which is 56 pounds of corn, is needed to produce the ethanol component of that gasoline. The third use of corn is as a sweetener in corn syrup, which you'll find in many of our food and drink products on the store markets. You'll also find corn being used for a number of industrial purposes, such as creating paper. Now, with all of this demand for agricultural products, it's surprising that for almost 3 years, the agricultural market has been in a relentless downtrend. But with this ever-growing demand, it can't last forever. It's also worth considering that 40% of the world's corn production is produced here in the States. There's only one harvest annually, which means that any significant disruption to this harvest can send a supply shock through the global grain markets and have substantial impact on inventory levels. And the single most influential variable impacting a US harvest is the weather during planting and growing periods, which is approximately from May through to August. So although we can't actually provide you with a detailed fundamental outlook on the demand and supply of these agricultural products, as technical analysts, we do believe that these factors are discounted into the price of agricultural products. So we will be providing our technical insights to the current trends within the agriculturals and what to look for in determining when this major downtrend will have finally come to its end. So with that, I would like to introduce you to our expert on the subject matter, which is Remy Garçon, as I mentioned before, Trading Central's head of global research. Remy has a master's in trading formation and is accredited technical analyst with the Society of Technical Analysts in London. Before joining Trading Central, he worked at one of the major European banks and is regularly quoted in Bloomberg and has written a number of books on investment strategies. Remy is probably considered an expert within the field of technical analysis and has provided a multitude of training courses worldwide. And with that, I would like to hand you over to Remy to present his insights to the agricultural markets. Remy, it's all yours.
Thank you, James, for this brilliant introduction. Well, thank you to all for joining this webinar. During the coming hour, I will run you through different assets. I would like to show some of the key levels, some of the key elements investors have to have in mind when they are trading on key assets like wheat, corn, soybean, and also sugar. I will do that by looking into some Teucrium products, which have the great interest of being a proxy of a future contract, but also a proxy which is a continuous proxy, which allows us as technical analysts to look into what has been happening in the past and look into some very long-term charts without having the problem of the rollover of the contract, which might be an issue when looking into a future. That's why I selected some ETF that can be traded bullish or bearish, so they can be short sold also. So I will focus on only 4. Sorry for that. And the focus will start with the medium-term view, the long-term view. As James said, we have seen a significant decline on agricultural product during the past years. We will see what are the key levels that you have to have in mind and what are the key area and the key signals that could be worth interest. Okay, so let's start with the first one I would like to describe and to discuss. It's about the wheat. Here you can see on this chart, which is a weekly chart of the week of the Teucrium wheat, that we've got a significant bearish movement in place since late 2012. You can see that prices are currently moving into a wide bearish channel, and you can see that you've got some significant area that are very interesting for trading. Well, first of all, if you look into this price movement, well, how can you define it from a purely Chartesian point of view? Well, what can I say? I can see that there are successive lower lows and successive lower highs, which is a definition of a bearish trend. So the current trend on a long-term view is obviously bearish because you've got successive lower lows and lower highs, which is a definition of a bearish trend, and also because the prices are trading into a wide bearish channel. In addition to that, if we are looking into some technical indicators like moving averages, we can see that the 20-week moving average, which is the red line on the chart in the middle, you can see that it has been a significant level where some bearish position can be taken, at least during 2013, and it is also an interesting way to look into the trend and to see area that could be worth looking into in case of an upside breakout. So you've got this short moving average, which is a 20-week moving average, and you also have this 50-week moving average in blue, which is a key which is pushing a high bearish pressure on prices. So with that said, we have to look into what is happening currently regarding levels. Well, if you look into the current levels, you can see some very interesting points onto this long-term chart. The first point to have in mind is that that prices are currently approaching 2007, 2009, and 2010 low area, which has been a key support during the past year, around 425, which is a key support area that could trigger some long-term recovery, or at least an upturn. Well, that's a key point to have in mind, because here on this chart, you can't really see what has been happening almost 10 years ago, but some significant levels are in the market around this area, around the 9 level on this contract. So that's a key point to have in mind. So if something could happen in the coming months, it has to be around this area, because it is a key reference for the market. So that's the first point. That's why the current trend is, yes, bearish from a purely chartist point of view. However, if you have to look into the past to key supports, you can see that because prices are currently approaching from a key area, a key support area. So that's why it is very interesting to look into what is happening on a shorter term basis. I mean, here we are on a weekly chart. Every bar chart is 1 week of trading, and we could wonder, is there any sign of a potential recovery, because we are approaching a significant level? Is there a potential upturn that is currently in the cards, and that technical analysis can help us in spotting some first signals? So what could be the first signals we could look into? The first one is at least looking into this 20-week moving average. You can see that since the beginning of the year, prices never broke up this key resistance. However, if you look into what has been happening very recently, you can see that prices are now challenging this area and also managed to break above this area for the first time since the end of January. So it's a key element here. It's a first signal that something could be happening. In addition to that, you've got prices that are very close to the lower boundary of the Bollinger Band. So it's a key area that has to be in mind of the investor. So that's about the purely chartist approach. Regarding technical indicators, you can see that the RSI is currently above its signal line, which is a typical bullish signal, but it's not enough. It's a first signal that something could be happening. At least the downtrend is lowering. That's what we can say from this first chart, this first weekly chart. Now, I would like to do a kind of a zoom and look into what is happening on a short-term basis. Well, here the story is completely different. If you look into a short-term basis chart, what can you see? Well, you still have this long-term bearish channel. That's a fact. You still have this area that is still in place. You can still see it. That's the first point. The second point you have in mind is that moving averages, which has been of significant resistance during the past year declines, are now below prices. You can see here the 50-day moving average, and here the 20-day moving average. They are both below the price, which means that something is happening now. You've got some kind of at least a slowdown into this bearish trend. So that's the first thing that should be popping into our mind. The second one is about what is happening regarding this trend. Basically, what is a bearish trend? A bearish trend is successive lower lows and lower highs. Here, what do we have? since the beginning of the year. Yes, indeed, we've got a high around late 2014. Then you've got some kind of a trading range here. And here, if we consider that as being a low, you can see that it is not. It is very close to the previous low. So here we are not anymore in a strong bearish dynamic because prices are failing to pushing lower, significantly pushing lower. At that point, what should be the next step to this analysis is to look into potential patterns onto this chart. So the first thing you can draw into this bearish channel is this kind of a falling wedge. And this falling wedge is most of the time a consolidation phase during a bullish trend. That's why I'm a bit concerned about the potential, about the continuation of a long-term bearish trend on wheat, because here you've got some kind of a slight bullish movement, a kind of a consolidation here, and since the upside breakout of the resistance of this falling wedge, there is a signal from a purely chartist point of view that is very interesting to look into. Now, I would like to look into technical indicators. If I'm just looking at this RSI, what can I see? I can see first that there is a kind of support around here, around 30, which has been triggering some recovery in the past, which is a very interesting area to have in mind. And also, what I can see here is that the RSI is above the neutrality area. The neutrality area is at 50, meaning nothing is really happening on prices. Here, obviously, the RSI is pushing above the neutrality area and is now into the positive territory. So, if I have to just do a quick sum up of what is currently happening on wheat, I can see that there is a bearish trend, but with a lack of bearish momentum in it. That's the first thing I can see. The second one is, yes, we still have some kind of successive lower lows and lower highs, but the new lows that has been recorded are very, very close to the previous low recorded. This means that there is a lack of bearish momentum. This is also obvious when looking into what is happening on the technical indicators. For example, on the RSI, you can have a look into previous movement here, this bearish trend that is also that can be also illustrated onto the prices by this bearish channel, and prices broke above this bearish channel, and also the RSI broke above this kind of bearish dynamic here, this kind of bearish trend line that can be drawn onto the RSI. So there are significant bullish arguments to say that currently there is a short-term rebound in place on wheat. But it's only a short-term rebound. Why? Because if we go back to the previous chart, if we go back to the weekly chart, prices remain into a bearish channel and also remain capped by the 50-week moving average. So there is a key level to have in mind. There is a key point that all the investors should have in mind. It is this 12 level, this 12 resistance area, which is both the resistance of the long-term bearish channel and also the area where is a 50-week moving average. So that's the key area to have in mind, and it is also 50% retracement of the previous down leg started late 2014. So if anything, any major upturn has to happen, it will only be confirmed if there is an upside breakout of this key area at 12, because this key area will trigger an exit of the bearish channel, and also will trigger a higher recovery than 50% retracement. So it is obviously opening the way for further upside, and also it will definitely confirm this falling wedge with a theoretical target at 14, because the theoretical target of a falling wedge is at the top of the falling wedge. So if we break through this area, there will be room for further upside to go around 14. So that this one is very interesting, because that's really a contract on which something is happening, and it is happening now. It is happening today. You can look into what is happening on the market, and you can see that wheat is obviously getting some strength, and we can see here some signal of a recovery, at least from a chartist point of view. And you can see that there are some very interesting levels to look into, which are this 11.5, which is the previous resistance that has been capping prices during the beginning of the year, and also this 12 area, which is a 50% retracement, which is significant retracement level onto commodities. So on our view at Trading Central on this wheat contract, that there will be a recovery into the short term. A short-term view for us is something like 10 to 20 days ahead. So in the coming months, we are looking, the coming 20 days of trading, we are looking for a recovery on wheat. That's our view, and it is backed by several technical arguments that are described here into this this chart. So here is the way we look into a chart. First, we will look into a long-term chart on a weekly basis. Then after, we will do some time scaling. We will go into the lower time frame and look into a daily chart and see if something different, if a different story is currently happening. And this is obviously the case here. You've got a long-term trend lacking downside momentum, and if you look into the shorter term trend, you can see that something different is happening to the market, because there are some signals of recovery. And here you've got a lot of interesting arguments to back a bullish view. So that's the first one I wanted to share with you. That's the first chart I wanted to share with you. Now, let's move to another one, which is a corn contract. Here, the long-term story is almost the same than on wheat. You've got a long-term declining trend line, which is in place since 2012. You've got an obvious declining trend with a 50-week moving average in blue, which is obviously capping prices and which is acting as a kind of a trading stop of this bearish trend. So, and you still have further weakness, further downside movement. But something that is interesting is the fact that prices failed to break above 2014 previous low. This is a very interesting point. It is the fact that at the difference from the wheat broke below this last year low, while corn is still around last year previous low and is still challenging it. So that's an interesting element to have in mind when looking at this bearish trend, because currently something could be happening. Yes, the long-term bearish trend is definitely still in place. That's obviously the case, and unless there is an upside breakout of this 26 key resistance, which is an horizontal level, and also this 50-week moving average, and around this declining trend line, the trend remain bearish. However, there are some sources of concern to the fact that prices fail to break below this 2014 level, and also they are very close to this the lower boundary of the Bollinger Band, which is most of the time a signal that a rebound could be in the card. So what is the next step? Well, the same then on wheat. It is to have a look at what is happening now on a daily chart. And what is happening here? Well, on the chartist, from a purely chartist point of view, what can we see here? Yes, indeed, we've got some kind of a decline. You've got successive lower high and lower low, so we are still in a short-term bearish trend. You've got obviously moving averages that are capping prices. You've got this 20-day, this 50-week moving average that are obviously capping the price. That's the point. However, you can see here that we have seen a first test of this moving average. It failed. Prices failed to stay above this moving average, but prices managed to do a test of this area. And it is very interesting because if you look into what has been happening in the past, you can see that during the past weeks, it has been very difficult for prices to stay above this area. So now there is the first thing that is very interesting. The second thing is that prices are close to the 2014 low, which is at 22.6. So this area is an interesting support, is an interesting reference. And last but not least, the story currently in place on technical indicators is very interesting because you've got a bearish trend which is obvious on prices here, and you've got this bearish trend on the RSI which is not so obvious, because you can see here there is a trend with successive lower lows and lower highs, but this is not the case on technical indicators because there is a reverse, so starting from that point and that point, and here we can see that prices managed to push lower while technical indicators fail to do that. This is called a bullish divergence. So currently on corn, we've got a daily bullish divergence which is in place on the RSI. And this signal is a very strong signal of a potential reversal. So now, what should we look? What should we look to have a confirmation of this bullish divergence? Because that's the only real argument. You've got two arguments backing a potential reversal. The first one is the fact that prices are approaching a previous low, which is at 22.6. The second one is the fact that the RSI is currently drawing a bullish divergence and the bearish dynamic on the RSI has been stopped out. However, prices fail to stay above the 20-day declining moving average. So currently there is a mixed situation where we've got a potential bullish divergence which is in place. And what we want to see from a purely technical point of view is an upside breakout of this previous high to definitely invalidate the bearish dynamic on the RSI. If we have that, prices should break above this moving average, this 20-day moving average, and here we would have a confirmation of the reversal. That's a very interesting situation here. Currently, there is a potential bearish, bullish divergence, a potential end of this bearish trend, but what we need at that point is to see an upside breakout on the RSI of the previous top, and which will be significant on prices if we break through this area. This area is not really easy to define because we are looking into the upside breakout on the RSI, and also because there is this key support which is now acting as a resistance due to the priority principle in technical analysis. This previous support is now acting as a resistance. So until we've got an upside breakout of this area, we don't really have a strong bullish signal. So we are currently in a mixed situation where we've got a bearish trend which is still in place, but challenging a key reference level that should be a key reference for all the investors who could be looking to adding some long position into their portfolio on corn. It is a key reference level, and so it could be a place where investor would be interested in adding long position. So at that point, we are in a mixed situation, still slightly bearish, but with some bullish advanced signals that are currently appearing into this chart. So this one is interesting, but the situation is not done yet. While on the wheat contract, the short-term rebound is in place and is I would say validated. While here we're in a situation in between where we don't see if if prices will break below the 2014 low, or if they will recover more and more and manage to break through this this key support now acting as a resistance at 24.3. So a mixed situation on corn where we've got a bearish trend which is a long-term bearish trend which is in place. But if we look into a daily chart, there is something interesting that is happening, that is not really already done, because we don't have enough argument to back a very strong bullish view on this contract, at least a short-term bullish view on this contract. Okay, so now I think you have an idea of how we look into charts. We first look into the long-term trend. We will look into what is happening on the weekly chart, see if the trend is on our side or not. I mean by that, the first step for any investor, at least when they are trend followers, is to look into the trend, because the trend is our friend, and try to enter position into the direction of the trend. But what is happening when this trend is slowing, when it is lacking momentum? This is a situation that is happening here on corn. So the idea here will be to look into what is going to happen in the coming days, see if prices manage to recover above this 20-week moving average. It will be this 20-day moving average. It will be a first bullish argument to back a bullish view. The second one will be to look into further upside on the RSI, and it will trigger a test of this 24.3 resistance. And if prices manage to break above this area, there is obviously some room for further upside, some room for further a bullish movement and a bullish a limited rebound at least. And bear in mind that on the long-term trend, there is a strong resistance around 26. So the upside potential on the short term is for the moment limited, even if there is an upside breakout of this intermediary resistance at 24.3. So now we have seen two charts I wanted to share with you. We will look now into one that is, I would say, almost obvious, which is the soybean, where here you can see on this chart that the current trend is, I would say, almost very easy to find, because you've got some bearish movement, you've got some lower lows and lower tops. So here you've got an obvious bearish trend, but with a momentum that is not as strong than all the others. At least the long-term trend is not as strong than corn and wheat. But we have declining moving averages, both 20-week and 50-week. There is a declining trend line, which is in place since July 2014, which is actively capping prices and which is stopping any recovery. And you can see that it has been tested several times, and it is a very strong resistance area. Also, prices are approaching from the previous low recorded early this year, and they are very close to an interesting area. If you look into technical indicator, they are definitely into the bearish area. They are below 50, and they remain below this neutrality area without any sign of a potential recovery. They are not oversold, so there is no potential bullish divergence like what we have seen on the wheat. So at that point on the weekly trend, you can see that definitely this trend is bearish. So soybean weekly trend is bearish. What can we draw on a daily chart? Well, here there is a situation which is very interesting. You can see that there is this declining trend line which is in place. You can see that this area is a very interesting one because it has been tested several times, and you can see that this previous high at 18.5 is a very interesting support level, because if price managed to break below this area, it will be a strong signal for further downside movement. Why? Because it is the only argument that could prevent further weakness, I would say. Because if you look into moving averages, they are going lower and lower. They are capping the prices. If you look into technical indicators, they are bearish. If you look into the RSI, it is obviously into negative territory, and it is not oversold, so there is no potential bullish divergence in place here. So here on the soybean, there is a bearish trend which is in place, and we've got here some kind of declining triangle, or some pattern that has at least are looking for a downward movement if there is a validation in case of a break below this 18.5 support area. So here a very interesting support that could be a trigger for further downside movement if there is a downside breakout. So at that point we have an interesting technical situation where if there is a downside breakout of this previous low, we could see a major decline on this one. Okay, so now we have seen three agricultural products, interesting one, corn, wheat, soybean, with mixed situation, with some still bearish situation on a long-term basis, but short-term situations that are really mixed, with a bullish wheat, a mixed corn with some obvious level to look into to find some potential recovery, at least on the short term, and a soybean which is definitely under pressure with no obvious bullish argument, and most of argument calling for further weakness, and a very interesting area where if prices are going through, it will be a strong chartist signal for further decline. Now I would like to run you through the last chart I would like to share with you which is sugar. Well, on this one, there is also remember the same kind of situation we have seen on corn, wheat, and soybean, with an obvious bearish channel. So here you can see this bearish channel, which is in place since late 2011, and you can see this bearish channel on the long term. You can see that moving averages are on the downside. You can see that the trend is on the downside, and that there are several bearish arguments in place on this one for further weakness. Here you've got the 20-week moving average, which is actively capping prices since mid of 2014. You can see that prices never managed to close above this area on a weekly basis, never managed to do a significant upside breakout of this area. So it's a very interesting area to have in mind, because it could act like a trailing stop for a medium-term bearish position. So it's a very interesting area. And also you can see that this area is a bearish channel, which is in place since mid 2014. So what is interesting here on a very short-term basis? Well, on a short-term basis, things are a bit more obvious regarding the current dynamic which is in place. You can see that here we've got this bearish channel, we've got this 50-day moving average which is in place, which is adding some pressure on prices. You can see that the 20-day moving average has been flattening during the past days. However, prices managed to break through this area, and now prices seems to be reversing down and ready to break through the previous low, late March low. Since if you look into technical indicators, you can see that on the RSI, prices never managed to break through this resistance area, which is around 60, 62, and prices, each time they struck against this area, they reversed down, and we have seen a significant bearish movement after that. So here we are currently in a situation where we should see some a decline on sugar with a strong bearish potential, because the first target is around the previous, the lower boundary of these bearish channels, and after you might see a rebound and further weakness. And if you do a projection of the previous bearish movement, you can find this area around 765, which is an interesting area, and also a very long-term support area. If you look into a very long-term chart, you will see that this price is coming from something like 1999, and it's a key support around this area. So here is my last chart I wanted to share with you. So just a quick summary of the situation we have seen on the different charts. Well, we started with wheat, with a bearish trend which is obviously in place since late 2012, and a strong bearish trend in place. However, a short-term situation where some strong bullish signals have been validated and are calling for recovery. So on wheat, we are looking for further weakness, for a potential decline on a medium-term basis. However, on a short-term basis, we are looking for a recovery and a potential test of this 11.512 resistance area. If we look into what is happening on corn, there is also an obvious bearish trend in place since late 2012, with a key declining trend line in place. However, prices failed to break below 2014 bottom. And if you look into a daily chart, you can see that there is a mixed situation where prices fail to break below 2014 low, and you've got technical indicators that are telling a different story than the price. This means that you've got an obvious bearish trend, a short-term bearish trend in place on prices. However, if you look into technical indicators, they are calling for recovery because a bullish divergence is currently in place, and if there is an upside breakout of this 24.3 resistance, we could see further recovery and a test of this 26 key resistance, which is a long-term declining trend line and also a key area of resistance. Now, if we look into the soybean, here you've got a strong bearish trend in place with a declining trend line in place since mid 2014, and a very interesting technical situation on a short-term basis, because we can draw some kind of a declining channel, and in case of a downside breakout of the 18.5 support area, we could see a very strong decline, because all the arguments for further weakness are here, are calling for further downside, and the only argument, or the only where we could see a recovery, is to have this support at 18.5 holding and triggering a recovery. But this is not what technical indicators are telling us. They are telling us that the current momentum is on the downside, and that there is still a bearish dynamic that is in place, and there is no sign of a recovery on the short term. Now, last one, sugar, which is in a bearish channel in place since late 2011. Here, moving averages are on the downside. No obvious bullish signal in place. A failure to break above moving averages, followed by a strong decline. Most of the time, the sign that some short position are entering into the market, because there is a strong market reaction around this resistance at 11. And you can see that on the RSI, there is the same pattern, the same setting, the same situation that is most of the time happening when there is a test of the resistance of this bearish channel. There is a test of the 60 resistance area on the RSI, and followed by a sharp decline, so at least a significant decline. So here everything is calling for further weakness. So I'm done with this presentation. What I would like to invite you to have a look into our ETF strategy alerts. They are based on the same kind of methodology than what I've been describing during this webinar. We will focus on what is the current trend on the medium term. We will look into short-term signals and find what are the key levels to look into, what are the key significance levels to watch out closely, and where we could see some reversal. We are adding to this alert some interesting comments regarding the tools we are using when we are talking about a wedge or Bollinger Bands or the RSI. We will provide how to use it. We will explain how we use it at Trading Central, and how to make the most of it. So even if you don't share the same market view, it is very interesting to have some clue about the way we look into the market, about how technical analysts are looking into the market, and the kind of tools they might be using to read the situation and to find if there are some underlying recovery or underlying potential rebound that could happen in the short term, because we are looking all at the same kind of tools. And when we see some significant movements, we are looking into the same kind of tool, and there are well defined in our alerts, because we will look into some criteria as I described. We will look into having several arguments backing our view to explain why we say that we have a bullish or bearish view on any asset. So if you want to have a look into our ETF strategy alerts, you can find easily you can fill in this subscription field. It's free. You will have an access to all our strategy alerts and on ETF, and hope you will find some interest in the way we read the market, in the way we look into technical analysis. Well, thank you for your time. Thank you for spending almost 1 hour with us. If you have any questions, feel free to send them into the chat box, and we will take 5 minutes to look into them and see how we can further discuss about the current situation in the market.
Well, thank you, Remy. That was a very insightful presentation. And for any of our attendees, as Remy mentioned, there is a chat box where you can post your questions, and Remy will provide his insights on those. So Remy, actually, while we wait for those questions to come through, looking at corn, where would you see a significant level for breakout occur on the midterm to long-term basis? Because we've been in this downward trend for a number of years now. What should people be looking for as a key indication that this downtrend is now over and there could be a movement, a bullish consolidation?
Well, here on this one, I would say that the key area to watch out is at 26, because definitely this area is a 50-week moving average. It is also a significant resistance that has been capping prices during the year. So here you can see that this area is a key resistance, and if prices manage to break above this area, prices will break through this long-term declining trend line, and also will break through this 50-week declining moving average. So it will trigger a strong bullish signal. So my answer is very quick. If there is an upside breakout of this 26 key resistance, it will be an obvious signal for all technical analysts that there is an upturn in the market, and it will be a very, very strong signals for a strong bullish recovery. In addition to that, if prices manage to break above this 26 area, there are also a very interesting situation that could happen. It is the fact that here we've got something that is looking like a double bottom, and if there is a dynamic which is in place at 26, if it push prices above this 27.7 level, it will be an upside breakout of this neckline on this double bottom, and it will trigger a huge recovery, because the theoretical target of such a pattern is the height of this pattern. So it is around $5 upside movement that could be seen in case of a break above this 27.7 key neckline. But once again, we need to wait for this upside breakout of this 26 area.
Okay, and you did mention on your shorter term view for corn, was there any signs that the downside was starting to break, or was this still likely in a downtrend?
Well, on corn, we've got on a very short-term basis, we've got some very mixed signals, because the story is that the prices are telling us, if we look into both prices, they are telling us that we are still in a bearish trend, because we've got successive lower lows and lower highs. Here we are still in downtrend. However, if we look into the current situation on prices, we can see that it failed to break below 2014 low, and there is also a bullish divergence that is in place on the RSI, and this is a very strong signal that there is a potential upturn on this one. So mixed situation, but with some very strong argument pushing for a potential recovery. So here, really, we really need to wait for an upside breakout of this 24.3 resistance, or downside breakout of this 22.6. But what is going to happen after that is a huge movement, because if we break through this support, it will trigger a sharp decline, and if there is an upside breakout of this 24.3, it will be at least $2 recovery towards this 26 resistance.
Okay, that's terrific, Remy. So unless there's no further questions from our attendees, I'd like to thank you for taking the time to share your insights and knowledge with us, Remy. And please join us again for our next webinar, which we'll be promoting in the weeks to come.
Thank you very much.